know that sound, today's closing bell at the New York Stock Exchange.
Let's see where the numbers settle as we approach 4 p.m. here on the East Coast. And you see it was a day of pullback. The Dow Jones dropping more than 220 points, down 2/3%. Trying to do my math. The S&P and the S&P 500 and NASDAQ closed the day relatively flat as well.
Well, glad for you for doing the math for us so we don't have to. Nancy Daoud joins us now. She's a private wealth advisor for Ameriprise Financial and the CEO of Opus Advice First. Nancy, good to have you. What was driving the market today?
Well, it's time for the markets to start believing the Fed, I think. And the focus du jour was really about the debt ceiling, the normal drama theater that the political drama theater that always ensues when we're at the debt ceiling mark. We're all hoping everyone will come to their senses, even though it might not happen until the very last, the 11th hour. But the alternative, unfortunately, would be very dire if they don't come to a consensus. So hopefully this is just normal business as usual.
And that's on the negative side. The plus is some of this data suggesting that the rate of inflation is now cooling. You've got new consumer price and producer price indices. What is it telling us?
Yes, I mean, it's at 5% now, which is certainly much better than the 9.2% that we experienced last year in June. So the good news is that things are going in the correct direction, but we're not quite there yet. So it's still, we still have some work to do before we get to the 2 or 3% inflation rate that we are shooting for, or that the Fed is shooting for. And I think the best advice is we've got to pay attention to what the Fed is saying, because they are very consistent. Mr. Powell has done everything he set out to do. And the market really be paying more attention to that.
Nancy, I want to follow up with you on what you were saying before about the political standoff over the debt ceiling. How much is that actually affecting markets? And as we continue to get closer to that potential deadline, how does that also interact with what the Fed's trying to do?
Well, we'll have probably significant volatility between now and June 1st, just because of all that uncertainty and all the rumors. But, the reality is that the alternative is so dire. If they don't come to a consensus and the U.S. government defaults on debt, we may see what happened in 2011, where there's a downgrading of our rating, and that will aggressively take the market down. And we might even go into that hard landing that the Fed has been adamantly to avoid, and perhaps even the recession. So that would be very, very dire, a very dire alternative. We really hope that is avoided.
And one of the wild cards, Nancy, is regional banks, right? Ever since SVB and its collapse, which I covered in San Jose, we've had Signature Bank, First Republic Bank. Now PacWest shares are tumbling. What is your view of the state of regional banks in the country right now?
Well, it certainly continues to be a stress. However, we believe that the banking system is very well capitalized to weather this storm. And as long as the federal government continues to intervene, in fact, there's talk in Congress of raising the FDIC insurance limit. Of course, they haven't discussed it yet because they have bigger things on the table right now. But I do believe that ultimately this will be just fine.
All right, Nancy Daoud, thank you.
Welcome.